What's up, everybody? Today I'll be recapping the price action from February 13th. I'm recapping a little late because I was busy at the moment. However, I'm going to be reviewing the draw on liquidity, the narrative, and the executions I took. If you guys are curious to know me on a more personal level, go to my YouTube, link in bio, to see my improvements, what I did wrong today, what I could have done better, etc., etc. I'm going to be posting also a weekly overview on how I did, my PNL, and everything. So if you guys are curious for that, check my YouTube. This is simply just going to be recapping the day. All right. So, as far as the narrative goes, right, we are looking pretty bullish as we're tapping into this discounted gap where I wanted to see price hit before going higher, obviously, because we have so much high resistance. We were in the golden pocket of EQ of that range. And what do we see here? Right? As opposed to this gap, which, yeah, it was holding. However, we were just closing through CE. We were not distributing off of the gap, off the imbalance. We were simply just there, ranging it and just sweeping, resweeping, remanipulating. Just not really seeing how you, just being unable to distribute and displace from this gap. So what did we do? Went lower and continued to chase this draw, which was my draw. I had this marked since the beginning of the week because I wanted to see price hit this imbalance, rebalancing the range of the high time frame over extended leg. All right. And as in difference to this imbalance, what do we see in this imbalance? We are not closing through CE. We are wicking CE of this gap. We are just wicking it, closing above CE, just respecting it and displacing from it to obviously rebalance this inefficiency and probably go higher, right? However, that'll be something for next week. Going on to the 30-minute, what do we see? When we are tapping and overall respecting this gap and its CE, what are we doing? We are generating liquidity, low resistance liquidity to this higher time frame draw, which I want to see get hit in the market. Yeah, so all of this, no resweeps, no manipulation. We are simply respecting this gap and adding generated liquidity towards our high time frame draw. So going into market open, what are we doing? This is now executions. What are we doing? We have all of this accumulation, right? 930 opens, we create this 930 high, but what did 930 high do, or what did it sweep? Absolutely nothing. Only these low time frame 1 minute intermediate highs, right? What did we do? We simply added to this generated liquidity, these slanted highs, and all of this generated liquidity on a higher time frame, leading once again to this higher time frame draw. Then we have this CPI news data low, right? We sweep this out and we just go lower, right? On the lower time frame, we do have these continuation gaps I wanted to see get hit, which we did like respect and mitigate, but more importantly, we sweep out virtually everything, which was the manipulation with that 930 PO3, right? What time was it? It was 9:42. So when 930 manipulates so hard and just leaves complete high resistance, and we wick the whole gap, respecting it, then we get this amazing inversing all of these bearish gaps in line of defense. This was definitely trade of the day. Just an amazing, and when 930 manipulates like this, you can obviously just expect 945 to distribute, which is what happened right here. Just an amazing trade right here. Targets are on standard deviation. I mean, it's just absolutely beautiful representation of that 930 PO3. Then after, if you didn't catch this, there was a little 2-minute re-entry that was like not super high quality, more of a high frequency trade, trying to force that continuation to the draw that was pretty obvious. I personally took this on eval because while yes, this is a mitigate, if we go on the 5-minute, this is technically a continuation off of this 5-minute gap. It's already, you can even classify this as inverse, but not only inverse, but completely mitigated. And we don't want to take continuations to already previously super mitigated gaps because nothing really changes from the actual previous setup. And two high quality setups to be like to displace and distribute is just less likely, right? So anyways, this is the 2 minute. I personally took this on eval, just not that good. If you had conviction, like I can forgive it because I had super strong conviction towards obviously the gap. That was so obviously gonna get hit. But yeah, just not the most mechanically valid, but we get a super strong inversion, and yeah. I actually took this on my Alpha Futures account, but I was over leveraging, just like kind of testing out the firm, and before it actually hit my stop loss, I already blown it, sadly. But yes, this is pretty valid, and yeah, that's gonna cut it for this video. Again, once again, if you guys wanna support my YouTube channel, feel free to do so, and you will get a little insight of my actual trading accounts later. What's up, everybody from YouTube? Today we'll be covering my personal kind of recap, so to say. So let's get started. Today I took technically like 3 trades because I gambled CPA, but I accidentally used micros instead of minis. So I did take a dub, but just like $100 dub. Then I took the 2 minute I was talking about, this one, on 2 evals, on an Alpha Futures eval and a top step eval, which is why my PNL is the way it is, right? So to get started, I did take it on eval. I didn't take it on my XFA just because I knew it was a mid setup, because the gap was just not amazing. The continuation trade, as continuations mechanically, it's just not that great. It's in an already super mitigated gap. I'm glad I took it on eval and not on XFA. So yeah, kind of clickbait right there. But to pay from that, I did lose below my alpha eval because I over leveraged, and I didn't know the max loss limit for alpha was 1,000. I thought since I could pass it in like 2 trades, I have an alpha XFA, but I passed it over leveraging, I guess. But yeah, I tried to pass it on a 1 to 2 RR, and before the trade hit my stop loss, it just took me out for a max loss of 1,000. It's just kind of gay, but I just have to deal with it. So yeah, this is my PNL for the day. I just took 1 to 1 on an eval, just halfway passing it, away from passing it. Not that bad. Just stacking up these XFAs so I can get rich. But yeah, going on to my improvements and pros and cons. So for my cons, I did miss the A+ opportunity, the 1 minute, and that's due to 2 things. Due to my narrative just being good but not great. I say this because I kind of took a similar approach where I was leaning bullish. However, I still had bearish sentiment due to how we were just wicking the gap, and I just kind of got like gaslit by this imbalance and like comparing the situations. But honestly, this is nothing like that situation, and I just had to like remember how we're closing above that CE and wicking that CE, and not only that, but actually looking at the 30-minute and seeing how much LR we have built up towards that higher time frame draw, the 4-hour. So yeah, just a little mistake. However, I did adapt and like see like how bullish we actually were. But I also didn't take that 1 minute because I was doom scrolling, and when we started getting displacement from that fat manipulation, I just couldn't calculate everything in time, so I just decided to let it go. Super sad, as that would have been an amazing way to end off the week. However, I'm not complaining. I had an amazing week, but we'll get to my weekly overview on the next video. So yeah, narrative could have been better. Missed that A+ opportunity. Good adaptability because I was able to adapt and like actually react great coming from that. I was like, I either get off or take a continuation towards still my high time frame draw, because I thought we were still going to be bullish, right? Obviously, just super clear, easy draw for the day. So I was looking for continuations. However, we did get a continuation, but I took it on an eval just because the gap was just not amazing mechanically, and just It wasn't that great. So it was a mid trade taken on eval, mid trade taken, which I did get a full TP on, but it was also a great eval decision trade. This is what I've been focusing on the past few weeks, just not only mechanically and narrative and all of those criteria, but as I'm actually like scale in the scaling process and account cycling, it's very important for me to be able to differentiate these eval to XFA trades and not get lost in the sauce. Because on one side you can either be taking like these eval trades that you shouldn't be taking on XFA on the XFA, or these like you could be fearful and barely take any XFA trades because you're only like super critical and you're just not taking XFA trades. So what I've been focusing lately is just on developing and understanding whether it was a mistake to take on eval or not to, or take on XFA or not to. So on this day, yes, it was an amazing decision that I took this trade on eval and not on XFA, in my opinion. Then so for the improvements, yeah, just when taking continuations after a fat distribution, go for valid unmitigated gaps that have reasoning for displacement, because oftentimes when people see a resweep or another setup that is very like another one, they take it without like actually asking themselves what's different other than that stop hunt or other than that's resweep. So just more criteria towards, let me check if we're still recording yet. More criteria towards what changes between setups and what makes them more valid than the previous ones, right? Because if one failed and nothing changes and then another one presents itself, it's probably going to fail. So yeah, improve my pre-market narrative, being less jumpy and overall having higher quality reasoning / technical analysis towards bias. This refers obviously to my little mistake with my narrative right here, but yeah, it's fine. And obviously don't doom scroll through market, be locked in till off. But if anything, read. This is something I want to focus on because it already happened twice this week where I missed A+ opportunity. Was able to save it, but that shouldn't be happening in the first place just because I'm doom scrolling. I'd rather have an actual technical analysis or human error mistake rather than be simply doom scrolling because I'm getting bored of fucking price action, right? So I'm going to stay locked in throughout. I'm super locked in throughout the day, so I don't understand why this little like 30 minutes to an hour, it's just kind of hard for me. But yeah, I'm going to read and just try to stay super focused. Because since I'm trading so many accounts, it's just kind of hard. I like to see the setup forming, to rate the setup, to see if I want to take on eval XFA, and to calculate my lot sizes throughout these accounts. So there really should be no reasoning why I should be doom scrolling, but yeah, it's something I gotta fix, and going on to next week, I will be taking into consideration, right? So overall, not a bad day. Performance 100%, obviously, but analytic results 100%, sorry, but performance and analytically I rate myself like 85% because of that little narrative jumpy shit and missing that 1 minute, sadly. But overall it's fine. Not upset with it, just happy we can find something and actually improve and refine from it. So yeah, guys, that's gonna wrap it up for my improvements and such, and I'll see you guys later.